Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the investments of the future.
That will make us money.
That will make us money. Post-election money.
Wow, November 2024.
Yeah. It happened. It came. It went. It was everything we hoped it would, dreamed it would be.
It does feel like it's an eternity ago that we were going through an election.
Doesn't it feel like we've been in the election season since 2016?
You know, it's funny. In Europe, elections only last for 3 months.
Yeah.
And I would love for that to be the case here.
Yeah, because then we have the midterms.
Yeah.
I literally, I don't know if this is like a part of the Trump, Biden era or what the case is, but I feel like we've had nonstop elections for the last decade.
Yeah, and then it's, I think also the media just focuses on it and on it and on it. But yeah, Trump is back in.
Yeah, and unanimously, handily.
Yeah,
no
issues.
No
I think
issues.
We were talking about this at the beginning of the year. One of the things that we were worried about is a transition between Trump and Biden in case there was some issues. That is not the case.
Yeah, I mean, he kind of dominated.
Square. Trump won fair and square.
Yeah, hope, theoretically. Yeah, I mean, he won the popular vote, which is the first time the Republicans have won the popular vote in a very long time. Yeah, he swept the blue wall.
Totally. Yeah.
And, basically, like if you look at the electoral map, other than the West Coast and some of the Northeast, pretty much had everything else.
Right. Exactly. Yeah. And I think that's a repudiation of the progressive policies of the left. I think the Democratic Party has kind of lost the plot over the last few years. Focusing on identity politics and all that stuff.
There's a lot of stuff. There's a lot of the social wars, like all the stuff that's going on, without getting too political here. Like, frankly, it's very clear, regardless of your political stance, it's very clear that the Democrats have some work to do.
For sure.
Because they not only lost the presidency handily, but they lost the Senate, more seats in the Senate. They lost the House. A lot of the local elections went to Republican candidates. So, it's time to take stock for the Democratic Party
100%.
And figure out what they need to do for 2026.
And listen, elections do matter. Yeah. And for the purpose of our podcast or the purpose of our conversation, right, is our goal is to understand what does this mean for our investments, how it's going to impact the economy. There is a change of the guard. Things are going to change. There is going to be some new opportunities in different
changing to the old guard, as we said. We're leaving. We're back to the old guard. We're not.
I think obviously we don't want to get too political here, but I think Trump has learned from his first term this time around, so it's going to be a little bit less frantic, I believe.
I hope you're right.
A little bit less learning on the job type thing.
I hope you're right. We'll see. Well, it remains to be seen. But obviously, the markets responded very positively the week following, or the day of the election, the day following the election, and that week as a whole. Thinking that we're going to have better tax policies, better business policies, less regulation.
So let's take stock of what's happened, why that is the case, right? So the number one thing I think is less uncertainty, right?
Yeah,
markets just hate uncertainty. Elections are by essence just an uncertain time, and now regardless of who's winning, we know that this is what's going to happen next, right?
And I think the interesting part this year is actually there was not really any volatility leading to election, almost as if the market knew who was, I always sort of personify the market as if it's a person who can think, because sometimes it feels that way.
Totally.
I mean, there was no volatility leading into this election. Definitely the least that I've seen in my career.
100%.
I don't think we had more than a 2% move.
I think the markets handicapped the election pretty well, actually, right? Like if you think about it, right? Because they kind of said they kind of were having Trump winning until Kamala kind of came into the fray. And then she had a bit of a bump.
I kind of joked that, she came in at the exact wrong time. She came in, she didn't have enough time to run a full campaign. and she had a little too much time to get past the initial excitement bump and then get back to normal. So she kind of was in a lose-lose situation. Right. But that being said, like, I mean, the enormous amounts of money spent on this election cycle, and only to just get hammered in the elections by Trump is very telling. And again, is telling. And I think for the most part, what's important for people to note is a lot of times it's not about the social issues; it's about the economy.
I mean, is that Reagan who said it's the economy stupid? Right?
Yeah, it just seems to be that way, and traditionally speaking, whatever. Not even the actual reality of the economy; it's the perception of the economy, right?
It's the vibe,
right? Like, yeah, because everybody keeps talking about how bad the economy, when in fact our economy is very good. Inflation is a 2-year ago story.
I was in France during the election, and it was really interesting to watch it from overseas.
Yeah.
First of all, because everyone is focused on us. The amount of coverage that we get is really insane to me. But also, too, everyone is so jealous of our economy. Even though, and people, and as a result, people don't understand how Biden or the Democrats have won because they think our economy is so good. Yeah. Right?
Yeah.
And the reality is, it's really about inflation.
Yeah.
Right.
But inflation's a 2-year ago story. This is, I think, the biggest problem the Democrats had in this election cycle was they let the Republicans tell the world that we're in a terrible economy.
Yeah.
That inflation is rampant. Everyone is having the worst time ever.
Yep.
And it's just not true, actually. This was a 2022 story,
this is
not
when
a
the stock market is at an all-time high.
Yeah, like how many times you said the stock market's at a high. Inflation's at 2.4%.
Yep.
Unemployment's sub 4% still.
Right. Yep.
Like all of these points, and I get that it's hard. You can't really combat emotions with logic a lot of times.
Right.
But I felt that they did not do a good enough job hammering the point that things are actually good and better than anywhere else here.
Right.
So like, in that sense, the Democrats should have won based on where we are economically today. We're still feeling that pain from a couple of years ago.
Yeah, and that pain is real.
Yeah,
for a big swath of the population, I think.
Sure.
And they all were motivated, and they came out and voted, right?
Totally.
And it is also this affront on capitalism, I think, from the Democrats, or at least demonizing success, capital markets, things like that. I think that's been also negative, because, I think this election, everyone says, is about the machoism, or at least, guys coming out, what I mean? Because, frankly, we want capitalism it's the best system we have.
We as people, not we as guys.
We as people in general. Yeah. That's what I mean. That's what I mean, right? So with that being said, let's understand what's kind of the background here that's going to lead us to the next kind of wave.
Sure.
Again, without trying to get too political, right?
Yeah.
What are some of the dynamics that I think going to drive markets going forward?
Yeah.
We're obviously tech focused. I want to talk about some of the impact on some there's going to be some big winners here and some potentially losers. Will there? I think there will be. So I think let's start with one is the money on the sidelines.
I mean, look, we've had people with money markets for years. Right. It just feels like we this broken record of record amounts of money, trillions of dollars on the sideline, and
$5.5 trillion,
$5.5 trillion, down from $6 billion. Right? That sounds like nothing. Yeah, so there's still $5.5 trillion. It's got to go somewhere, especially if
rates coming down.
Right? It depends on what the Fed's going to do. They were a lot more dovish, in the past. Now they're a little more.
Can you explain dovish?
Yeah. So they were, the idea was that right in September, which was the first rate cut, the Fed cut by 0.5%. The idea is that they were going to make subsequent cuts of 25 to 50, 0.25 to 0.5% for the several coming months. More recently, with the better jobs numbers as well as the Trump election, there's an idea that inflation might be a little stickier now because of tariffs, because actually the economy might grow at a more accelerated pace. So therefore, more cuts may not be necessary or might be more gradual.
Right. The Fed does not want inflation to come back.
Right.
We've beaten inflation, and they've always said they're going to be data dependent, and they have been. And that means is if things get better, we will not have to cut rates as much, which means that rates will remain longer.
And in their defense, they've done a great job.
Yeah. I think Powell, as much as criticism you want to give him, he's landed this plane. You know what I mean? No recession, depending on how you look at it. But he's landed this plane. But that means that $5.5 trillion in the sidelines, earning 5% or less in treasuries, has to go somewhere. And when you remove this uncertainty, right now we have less uncertainty in the economy. That money has to go. We're having this conversation with our clients right now. Right. Where do we want to invest? What are areas of the market? And we'll talk about some of the sectors and stuff. But that's a big catalyst, right?
Going for forward. Sure. I mean, there's so much cash on the sidelines. And again, if you were earning 5%, 3 months ago, and in 3 months from now, if you're earning 4 or 3.5, right, that's a big difference. And we're seeing markets at highs. We're seeing, growth in AI. We're seeing all this, and you're sitting on the sideline earning 3.5% in 6 months or whatever it is. Going, what am I doing when?
I think the week post-election was one of the biggest inflows in the stock market after.
But interestingly enough, we had a huge pop, right?
Right.
After Nasdaq was up like almost 5% or 7, something like that. And then last week we kind of pared those gains back as people sort of calmed down, and like, okay, let's take stock, and we kind of moved back.
Markets always get too excited,
always, and you have the people who chase, and oh, now that Trump got elected, I had a few clients like, oh, Trump got elected, I want to add more money now. So it's expected. There'll probably be a little bit of consolidation as people wait and kind of see what's going on, and we get into the real policies. We wait to see who the heck he's nominating. As his nominations are having like material effects, at least on the short term, on different
change
sectors,
of the guards, right? Like now we're gonna
you nominate RFK Jr. The entire healthcare sector has been hammered.
Sure.
The food sector has been hammered because
vaccines have been hammered.
Vaccine, yes. So we're not gonna get into that. That's a different podcast. That's not this one.
What's that? So number 2 is the regulatory environment, right?
Yeah.
So who he nominates for his cabinet picks and also all the government agencies really matters, right? And I think the Biden administration probably legacy is one of regulate, right? And I think Trump is going to be the exact opposite, was less regulation, more rampant capitalism.
We'll see where that leads us.
Yeah, we'll see what that leads us, because right? And
the last couple of times we had deregulation, specifically in the financial sector.
Didn't work out that well.
We had the First Republic and Silicon Valley Bank go down last year, which you can blame or not blame.
I think more 2000 and
that was the last one. Is all I'm saying.
Yeah.
The last 2 times we've deregulated financials, we've had major bank failures. And again, I'm not saying that Trump was the one responsible for the Silicon Valley Bank and First Republic, but certainly there's at least some argument to be made about deregulation.
It's kind of a weird, tough balance to strike. Like how much do you need kind of the government's heavy hand versus how much do you let markets run, right?
For sure. It's the age-old debate, right? If we go back to the Gilded Age, in the 1800s, like laissez-faire capitalism, where you have these, enormous wealthy robber barons, right? And there's a lot of people who are arguing that we're kind of going back to that, right? We have, billionaires basically running the show now.
Right.
And the laissez-faire, they let them be, right? Let them do whatever they want to do. Well, we know that ends up poorly as well. But if you regulate too much, it stifles growth.
Yeah, listen, I was in Europe for the election, and in Europe, all you talk about is tax. So you kind of have the other side, which is literally stifling growth, stifle opportunity. What are the best entrepreneurs in France? They're actually in the U.S. Because anybody that has good ideas
that's what we talked about last time.
You know what I mean? So I think that's kind of the other side of this thing. But if you think of regulation, you think there is AI, right? Which is a big one that we need to figure out, right? And it has some crazy ramification on society, right? We have M&A, right? Which is Lina Khan, the FTC, and all the basically they were suing every transaction, everybody, right? and antitrust, right? So same kind of vein. Yeah. So those three things I think are going to be front and center going into next year. I think they just nominated the new FTC chair. FCC chair.
Yeah. Who does not like big tech?
Does not like big tech,
and also the co-author of the 2025 project. So just so we're clear on that.
Yeah. So so his elections matter.
Elections matter. Yeah. And again, the deregulation definitely. Yeah, again, if we're talking about it from a macro perspective, for markets, for investments, generally speaking, at least in the shorter term,
right.
Those are positive. Couple of years, those are positive for ultimately. Yeah. And then obviously we have tax cuts and
and the tax cuts, right? Like I think they want to. This is not easy to do, but the Republicans want to take corporate rates from 15% to 10%.
Yeah.
Sorry, from 21% to 15%.
And then maybe 10 was also discussed. Which
I don't know how we're going to pay for these.
Yeah.
Because we have a massive deficit. If anybody has been watching, Yeah. Our debt service right now is almost $1 trillion a year. I think that's a big problem for the country. We can't just keep printing money per se. But
tell that to the last 20 years.
Yeah, but that's the reality, right?
Yeah.
Like and
at some point the bill's gonna come due.
Correct, exactly. So those are really kind of huge catalysts going into next year, right? Yeah. And there is going to be some. You have to watch this stuff because there's going to be some winners, some massive winners, as a result of this, and we are here to take advantage of this.
Yeah. That being said, I think it's really important because it's, there's always a question of, when does the market do better? Does it do better under Republicans? Does it do better under Democrats?
I'm glad you're going there, yeah.
Frankly, it's the same.
It doesn't matter.
There's a couple of nuances here and there, but they're not even statistically significant. Yeah. So for all intents and purposes, whoever's in power, it just kind of doesn't really make a difference.
Yeah.
From a global macro perspective, sometimes the Republicans will do great, sometimes they'll do poorly, sometimes the Democrats will do great, sometimes
I would argue the cycle is what matters most.
What matters is really the economy. Right. And also, it's funny because if you watched the markets after Trump got elected, the things that rallied were, in addition to obviously tech, which had some go, but it was the non-sort of tech stuff. It was financials.
Yep. The
Trump trade, quote unquote, industrials. It was small cap companies, smaller companies that have more exposure to the U.S. and very little outside.
Reshoring, basically. Yep.
What's funny about that
it didn't last.
is in 2016, number one, it didn't last. Basically, we gave all those back. And if you actually look back at what happened in 2016, all the, quote, Trump trades were actually not the better performing asset classes, right?
Yeah.
With all the tariffs and all the rhetoric and all the stuff that he went through.
Like, for example, oil did horribly.
Energy was the worst performing sector in the S&P during his stint.
Renewable energy crushed it.
Yeah. So, it is not doing so hot.
And vice versa during Biden.
So funny, right? It was like the trade that everyone thought was going to happen. You had, the Inflation Reduction Act. You had all these things that were going to help the green energy trade.
Yeah.
And it fell flat on its face.
That's exactly it. And this is kind of, I think, when you, as a market participant and someone who observes these things, you have to be humble and you have to understand that oftentimes what's obvious is not really what's going to happen.
Absolutely.
So
obvious is not obvious. In the end, the investments will perform based on earnings. I'm not talking about speculative investments that people are buying because they think whatever is going to be worth $1 trillion in the future. Regular companies is what are you actually doing in earnings? Yeah. So over 3 months, you could have artificial pops in investment, 6 months. But over the next couple of years, it's ultimately going to be who's making more money, who's growing, who's in AI, who's benefiting from AI.
And also, like, market dynamics will trump all that because market dynamics, like if AI is just a growth area and you're in that space, you're just going to do well.
Exactly.
Right? Like, I think that's kind of what you have to look at your investments in that way. But if you're in a depressed environment, you're just not going to do well.
But it's like, so if we go back and we look at what happened, right? We think all the Trump trades, he hated big tech.
Yeah.
Right? Best performing sector in the S&P. Large cap technology.
Yeah. Okay. Basically the Mac 7.
The Mac 7, whatever we called it back then. It was FANG back then. Now it's, poor Netflix that just got kicked out of it's killing it. No, but it's not an acronym anymore. Like, can we do a Mag 8? Like, I feel like Netflix should be involved.
Totally.
We called it the Elite 8. That was our thing.
Netflix is bigger than the whole entertainment business together. So that's how.
We on this podcast have called it the Elite 8 rather than the Mag 7 because Netflix should be involved, I think.
Yeah.
But tech number 1, number 2, consumer discretionary. Right. People going out and spending. The economy was good.
That's Tesla. That's Netflix. That's Disney. That's all these things.
Exactly. We had that, and then we had healthcare, which everyone thought would be not a great investment. So it's like you have all these logical, quote unquote, logical ideas in your head. And ultimately, what the reality is could be completely different. Yeah. So trying to speculate on which asset class you're going to buy during that time is actually very difficult.
Right.
And small caps, to that matter, again, all the rhetoric about tariffs and all the stuff, the S&P vastly outperformed the small and mid-cap index. And we're not even going to go international because international did horribly. In which case, it's
well, did you know that most of the small cap companies don't make any money?
They don't make any money. Yeah. So there's 2 small cap indices. The Russell 2000 has the most broad, but the small cap 600.
That's the one.
Is the one where you have to be actually profitable to enter the index. But again, small cap vastly underperformed. And in an environment, if the Fed is less aggressive in rate cutting, and rates stay high, this is bad for small companies. Sure. It's more expensive to loan. It's more. And by the way, this morning we read some research that the Russell 2000 is actually pretty expensive now. Statistically, so like, again, you should own some small cap. You should own large cap. You should own a little bit of international. You need an asset allocation, but trying to make big bets on sectors outside of companies that are great, like to say, I think because Trump's here, industrials are going to do well, like it's just a really hard game to play.
Got it. Yeah, 100%. And again, it's about going a little deeper. In the thinking, right? Like it's not Trump trade, buy oil, boom. Right. Like you have to be a little bit more thoughtful. You have to be more measured. This is why we didn't make massive moves before the elections or after the election. We try to be thoughtful about our allocations long term. And that's really how you make money over the long run, is really kind of try to participate in the whole cycle versus just try trade into some kind of event, right?
Yeah.
So let's switch a little bit about some of the boogeyman stories, like tariffs, the big tech bias and all that stuff. And those are the questions that I keep getting from people and clients, right?
Yeah.
Trump wants to put tariffs on everything.
It's always hard to parse like what he's really going to do versus what he's like just blustering about.
I think Trump is probably the only president whose supporters don't want him to do everything he says he's going to do.
Yeah, they're just like, we want you to get elected, but then just chill out.
He actually cares about the stock market, and he actually, I think, cares about his legacy. So I don't think he's going to put tariffs, 100% tariffs on Chinese.
Look, he did tariffs last time, and it was mostly about Chinese companies and steel and things like that.
Right.
So, Chinese companies, we've been reshoring a lot of our stuff from China.
Reshoring meaning bringing manufacturing back to the States,
or bringing it or moving it to other areas in the world, Vietnam, Taiwan,
closer to us,
Mexico. That started under Trump because of the tariffs. If I give him credit for anything, and I don't give him a lot of credit for a lot of things, but if I give him credit for one thing, is that this hard stance he's taken against China has been beneficial for the U.S. and been detrimental to China.
Yeah.
Because China had been taking advantage of the U.S. for a very long time.
Right.
And this thing started, and then obviously we had COVID, and once the manufacturing issues happened in China with COVID, people started moving their stuff out of there.
Sure.
Then we have the Inflation Reduction Act that gives benefits to bringing money back here, to bringing reshoring stuff here. So we've diversified our manufacturing outside of China significantly since Trump's first term.
Right.
So that mitigates the tariff discussion on the China stuff, right? I think steel and aluminum, like, I'm gonna be honest, I don't know if that's gonna affect much.
Yeah. Yeah. I mean, I think China is basically consumes most of the steel in the world anyway.
Correct.
Right?
And their economy is not doing very well. So you can have the argument that their reduction in demand will be offset by a tariff or something like that.
I could tell you again from being overseas the last few weeks, Chinese products are doing well. Like Chinese EVs, for example, in Europe.
Yeah.
They're doing really well.
And they're very cheap. Sell all your data to them.
Yeah.
Just so that you can buy it.
But it's, at the end of the day, it's economics. It's just cheap.
Sure.
You know what I mean? They're dumping their products and you know, I think Europe is waking up to that.
They put a bunch of tariffs on Chinese cars.
Yeah, right? And that's exactly it.
And they put the tariffs on American cars. And again, this is something that like I respected for Donald Trump for doing, is being like, listen, you want us to sell your cars with no tariffs, but you want to sell our cars with tariffs? Like, it doesn't make any sense.
Yeah. So it's again, I think it's a little bit more nuanced and complicated than just I put tariff on your product, you put tariffs on my products, you know? But we have to recognize it's adversarial between us and China.
Yes.
And they are dumping their products, meaning that they're selling it below market, which is not a good thing for our own manufacturing. So I think that's something to be watching over. I think Elon Musk being part of the Trump team is super interesting because...
Isn't he vice president now? What happened to JD Vance?
I think he's running the biz. Yeah, I think he's
basically hit him off to the side, and Elon is now.
Well, the reason I say this is because Tesla's biggest market is China.
Yeah.
Right. Elon actually has a very, very good relationship with China, and they actually one of the few foreign firms that actually own their business 100%.
Yeah.
So I think there is some things to be said about maybe facilitating some conversation there between the Trump administration and China and figuring out some kind of a resolution or deal. But I don't know. It's all speculative.
Who knows? Exactly.
Who knows?
So I think when you bring that up, I think it makes sense for us to talk about, okay, right? If the tech sector was the most beneficial sector during the Trump administration, during the Biden administration, during pretty much every administration for the last 15 years, how are these companies going to be affected by tariffs? How are these companies going to be affected in a new Trump administration?
Well, I mean, tech has been very important because they're just printing money.
Yes.
Like,
that's fair.
It's as simple as, you know what I mean? Like if you do
$400 billion in revenue,
that's Apple, right? Or Amazon or Facebook or whatever, So I think
insane amounts of money.
Yeah, it's insane. And again, like as you travel, you see how important these products are to everyone. I mean, taking an iPhone overseas as a gift is like the best thing you can ever do. Yeah. That's how I buy it on my nephews. I just buy them iPhones.
he did it the right way. He definitely did not.
Yeah, exactly.
Did not do it in a way that was
exactly. But what I'm saying is these products are so coveted, and that's why they're doing so. These companies are doing so well. Yeah. Now with Apple, let's kind of go through the list, right? Apple being number one.
Yeah.
Right.
Technically number two now.
Technically I'm the NVIDIA, right?
Yeah.
But Apple has, 2 billion basically products out there. That's the iOS kind of
2 billion devices.
Devices, about 1 billion users. Of their devices. But most of the products were made in China, right? So now what Apple has been doing very smartly is moving some of their production to India and other places, Vietnam and so forth, right? But also Tim Cook has been very, very smart politically. And I think that's how you want to think of being politically smart, is not really offending, whichever administration is going to be. Right. But Tim Cook was...
In spite of it, I'm sure Tim Cook does not agree with Trump on most things.
Correct.
Right, but he understands that he has a business to run, that he has shareholders, employees, and he's responsible for these people.
Right,
and so he's got to, he kissed the ring.
Right, exactly.
And Apple's going to get exempt from most likely from tariffs and things like that.
Yeah,
and that's smart business.
That's exactly it, and it's. As one of the most important companies in America, I think that's really smart business from Trump administration as well, right?
Yeah.
So I think, again, business and politics kind of work together, so it's important that we see that,
Totally.
So I think Apple probably winner here.
Yeah, in spite of the fact that they're probably the most exposed to the tariffs of the Mag 7.
Correct. Correct. Yeah. Tesla, probably also the second biggest winner here.
I mean, Tesla's been, like, if you watch the stock market, Tesla has been the absolute winner. I mean, what is it? And Tesla, I think, has rallied about 50% since Trump got elected.
Correct.
And obviously a lot of that is Elon being
I was confused about Elon's support for Trump because Trump does not stand for clean energy, but I think what Elon's calculus is, pro-market policies are much more important to him than anything else.
Sure, he's also a little bit crazy.
That's true too. That's a
good point. I would love to say that it was a strategic business decision only, but I think there's more sinister things there as well. But regardless, Elon, Tesla, I don't know if long-term they'll be the biggest winner, but they're definitely been the biggest winner on the short term.
Well, I think the IRA, the Inflation Reduction Act, which is the big clean energy bill, has been very favorable for Tesla.
Yeah.
Including the $7,500 credit for every EV sold.
Which is now probably going away.
It's going to be going away. So that's, for me, that's confusing.
So there's a couple of things, right? So like you look at Tesla and there's pros and cons. Obviously, Elon being Trump's right-hand guy now is very beneficial for Tesla, and he can circumnavigate all this stuff that's going on. But right, the removal of the $7,500 credit is hurtful to Tesla. The interesting part is that it's less hurtful to Tesla than it is to all the other EV makers.
Right.
So
that's sinister right there.
Is this a strategic move? I'm not one for conspiracy theories and any kind of thing in any way, shape, or form. But does this actually kill the competitor EV market? Yeah. And Tesla's kind of not the only one standing, but the only one standing well.
Yeah. I don't know, man. Tesla's big plan is to electrify the whole car fleet. So
yeah,
I hope that's not the case.
We'll see. But yesterday we get reports that self-driving regulations are going to be lifted.
That's very positive.
So that's positive for them. We'll see what that means. Again, all of this stuff is still speculation.
Right.
But then you mentioned the China thing too, right? Is he going to be able to sort of like toe the line with China and Trump? And is he going to let so? Again, I think having basically living in Mar-a-Lago at this point,
pretty much,
I think is going to be beneficial for Tesla. Does it help them for the bottom line? Does it grow their revenue, their earnings over the next couple of years? That I don't know.
Yeah.
But the perception of having having access to the leader of the free world is very good.
100%. And I think that's why the stock has moved up so much, because fundamentally things haven't changed really that much. Yep. So
and Dogecoin.
Dogecoin, that's right. Well, we should talk about Bitcoin at some point.
We'll talk about crypto. Maybe that'll be our next segment, is where we talk about crypto.
We should have someone talk about crypto next.
Maybe we'll bring Brett.
Yeah, there you go. So that's that. Those are the kind of the two biggest one. Google, Microsoft, and kind of Amazon.
I feel like Microsoft is basically not affected hardly at all. Right? If you think about it, they don't really make products in China much. They're not at risk of being a monopoly.
If you have a tariff war, Microsoft has a lot of foreign sales,
Yeah, but the tariffs, as far as we know, are not a hit on foreign sales. Yeah. Right, we don't.
I think retaliation will be
sure, but as far as exposure to the risk, I think of the Mag 7, they're the least exposed.
Yeah, but no, I think the antitrust stuff is really where what the big risk would be.
That to me is more of a Google risk. Google risk. Microsoft is much more sort of like their business is much more diversified and broad.
Right.
Google's business, which obviously has already gotten a ruling for antitrust breakup.
This morning, they were told to sell Chrome.
Right.
Which doesn't make any money.
Well, the argument is that Chrome is your default browser that you put on phones. This is actually almost the exact same argument with Microsoft in the 90s.
Correct.
When you made Internet Explorer the default navigator for everything, you control the outcome, right? And for those of us who are old enough who remember Netscape Navigator when it came out, like nobody used it once Windows started putting Internet Explorer as the default, and that was ultimately what lost them the case.
Yeah, that's exactly it.
And so the question becomes, before this morning, I would say the regulatory environment on Google is probably going to be lessened with the incoming administration, but now this FCC the head of the FCC that they nominated, is vehemently anti-Google and anti-Meta.
Yeah.
And they perceive these companies as inherently biased against the conservative viewpoints.
Right.
So I don't know. It's interesting to see what happens.
It really is. It really is. And oftentimes also, these things take so long to play themselves out through the court system, right? So something that Trump started 4 years ago is just getting to the court right now. Right?
And that's what happened with Microsoft too. And I think it's important for Google. Google has a double existential threat right now, right? On the one hand, from one front, they're fighting the government. On the other front, they're fighting AI.
Yeah, their business is challenged.
So, I even said this the other day, and I have a lot of clients at Google, as you know. I said this the other day, and a lot of people I talk to, at least somewhat agree.
Yep.
It's like when I had a question 2 years ago, there's no doubt where I went to get that question answered.
Right.
It was Google. 100% of the
now.
99 out of 100 times you went to Google. Now I go to Google, I go to ChatGPT, I go to Perplexity.
Yeah.
There's just there's more options now. And Google just has this sort of dual threat against it, which is why the stock is, the valuation is much lower compared to bigger tech.
Sure. Yep. And again, we talked about this. It's the innovator's dilemma, right? Like, do you disrupt yourself?
Right.
Because 90% of your business comes from search.
And if they don't, they will have a real problem.
100%.
Because these companies, because Chat and Perplexity specifically, are understanding how to be the new Google, where they're adding links, they're adding sites, citations, and I'm sure it's not going to be long before we start seeing advertisements.
Yeah. Zuckerberg,
or what did he call him? Schmuckerberg or something? He called him something like that, I think. I mean, Trump is not like Mark Zuckerberg or Meta. So again, who knows? There's just such wild cards.
Yeah.
I think once we get past the first 6 months, where we actually see who gets nominated, who gets in place,
right,
and what real policies are going to be
what the priorities are going to be,
versus speculating on, he's going to do this to this person, he's going to do that to that person. Because again, all the stuff we thought in 2016 and into 2017 really didn't pan out the way we thought it would.
Right. So I think that's a breakdown of really what to look for.
I guess we missed NVIDIA.
NVIDIA is, for me, the AI story is the most important story out of anything we've ever talked about. This is existential. This is changing the way we do everything. This is not bullshit. This is not, maybe one day. This is happening today. I think it's going to impact every business, every task that we do, right? And frankly, NVIDIA is the only game in town. There is no, and I think if anything, it's more of a strategic asset to own NVIDIA, or at least be with NVIDIA, because AI is going to become a geopolitical asset. It's going to become a structural asset. If you own AI going forward, you're going to own the world in general.
Sure.
So.
The question is, most of NVIDIA's chips are manufactured in Taiwan.
Right.
Some in Korea.
Right.
But most of them offshore.
Right.
Does Trump go after them because of that?
Yeah.
Does he?
Obviously the Taiwan-China thing is the biggest issue or
But does he like Taiwan? Because it's not China. Right. Does he like it or does he not like it?
But I think also NVIDIA is not just GPUs, right? Yeah. NVIDIA is software too.
Yeah.
Right. Totally. So I think the reality is it's a strategic asset to own, or at least help protect Taiwan, because that's where we manufacture all of our GPUs.
Yeah.
But ultimately, I think the story is much bigger than that. Right?
Yeah, for sure.
And NVIDIA is kind of the jewel, right? Like, you know what I mean? And I think everyone's going to protect the jewel.
We'll see how it goes. They have earnings tomorrow.
I know, earnings are tomorrow.
I'm very excited, even though supposedly their Blackwell chips get too hot.
Yeah, too hot, and they'll figure it out.
I'm sure they'll be fine.
So yeah, Trump won.
Wait, he did?
Yeah. Business as usual.
Business as usual. Like, regardless of what you feel, and I know there's a lot of feelings on this election.
Yeah.
One way or the other. It's important to know that this is the reality that we live in.
Yeah.
Whether you like it or hate it, how do we profit? How do we benefit?
Yeah.
How do we make, and if you don't like it, take advantage of what's happening right now and build up your assets, build up your assets. And if that means that you want to affect change somehow in the future, use the wealth that you can possibly accumulate during this time to do that.
That's exactly it. And also, I think the reality is, our system is so much more resilient than anybody can give it almost credit sometimes, and I think we will get through whatever is gonna come at us, and we've done this for almost 300 years.
Yeah, so. I'll kind of leave this as no podcast would be complete if I didn't make a historical reference.
Exactly.
And in the lead up to the election, I listened to this history podcast, and they did an entire segment on America in the 60s. It was a multi-part segment in 1968, and that's the Vietnam War, the assassination of RFK, the assassination of Martin Luther King.
Talk about some tumultuous time.
Martin Luther King, the civil rights movement as a whole. Then you had Johnson, the Nixon issue. Like, America was in a bad place, right? And there's this idea that the 60s was this free-loving, hippie environment. Like, we've been in, and then you go to the 40s and we had world wars, and in the 20s we had the Great Depression. Like, we are way better off, in spite of what you feel
100%
right now. Yeah. We are way better off than we were in the past, and you might be sad of what's going on, and the progress is not a straight line.
Yeah,
there's always comings and goings, but feel better than knowing that in spite of what you think or what the news is saying or what's going on in the world, things are much better than you think they are.
Right, 100%, and I think there's a lot more opportunities down the road. So.
That's a good place to end.
Yeah, so I'm very hopeful.
All right, guys.
All right. See you next time.
Cheers.